Good morning, good afternoon, good day. Welcome to my midweek market meeting, 28th July 2021. I am Sagar Nandi, retired IT professional, doing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run on the underlying TradeStation and MetaStock platforms. That was the last slide of the presentation. Let's continue with the live system. As usual, starting with a look at the global markets, starting with Australian index AXJO. In last several webinars, we saw that the global markets were moving sideways. That is continuing. AXJO, Australian index, came to the watermark created by the previous bearish headwind and created a false upside breakout with a bear release signal. It came back inside the range again. Weekly has displayed a bearish headwind signal with bearish backdrop color. It is at the upper edge of the sideways range. If anything, we would look for shorting opportunities at this point in individual stocks. It is moving sideways. Japanese index topics. This is also moving sideways. The weekly is bound by resistance and support trend lines, and the daily is also bound by resistance and support trend lines. It's right at the middle of the sideways range. That is not a safe area to take swing trades. China's 300, CSI 300 index. This was moving sideways until the last webinar. It still has the trend line resistance in daily. There was trend line support in daily that is broken now. That was at the same level where the weekly trend line support is there. It broke down below the range. It is extended to the downside. The stretch band indicator shows it is oversold. Q technique tells us to wait for a pull up and then a tilt down, giving us a low risk shorting opportunity at that point. If that happens, that will be a possible go with flow shorting opportunity. Not only China market broke down, Hong Kong market also broke down. Let's look at the Hang Seng index. This had trendline support and resistance in weekly as well as daily. Daily had support from watermark. It has broken down rapidly, just like the Chinese market did. These are probably the only two global markets that broke down, and it may have something to do with the increased regulations in the Chinese market. On the other hand, if we look at some other global markets, let's say Singapore market, continuing to move sideways, has trend line support and resistance both in daily and weekly. UK's FTSE index. This is also moving sideways. It has watermark support, trendline resistance, moving inside the range, and it is right in the middle of the range, not a safe area to take directional swing trades. And lastly, India's Nifty 50 index. That is also moving sideways. Daily has trendline resistance, trendline support. Weekly is moving in unusually narrow range. If you look back all the way to the March drop, March of last year, related to COVID virus, or even if you look back further, you will not see the price moving in such narrow range for so many weeks, one after another. When the price moves in such narrow range for so long time, once it breaks out, the movement may be more than the movement in recent weeks. The volatility is expected to increase at the point of the breakout, and that will be the appropriate time to take directional swing trades. Now it is in very narrow range. It is best to wait out this sideways move. The global markets are all moving sideways except China and Hong Kong, and those breakdowns may be related to the regulatory reasons specific to those countries. Otherwise, global markets are moving sideways. What about the USA market? For that, let's use the three chart template for that: weekly, daily. Starting with the S&P 500 ETF SPY. I'm using TradeStation now for the USA market. Last week, SPY made a new all-time high. This week so far, it has indecision candle with an indecision at the top indicator. Backdrop color interestingly turned magenta. Daily went to the upper boundary level. It was overbought, shown by the stretch band indicator. Yesterday, price pulled back little bit, and it in fact displayed a bearish headwind possible reversal signal. Also displayed a bear release signal. The volume was above average. Looking at the bearish headwind in the daily, one may be cautious. However, there is no headwind short trade setup because all the checklist conditions are not met. It is too close to upper boundary to take any long trade, and there is no short trade setup. Let's look at QQQ. QQQ also made a new all-time high 1 week ago. This week the weekly color has turned yellow. In daily, price was at the upper boundary like SPY. Interestingly, QQQ has also displayed a bearish headwind at the top, bear release signal with very high volume. Again, the candle shape is not bearish, so it is not giving us any headwind short trade setup, and also it has trend line support very close to yesterday's close. We are not going to take any short trade. We may be cautious if and only if this trend line is broken. For now, there is no reason for concern looking at this weekly daily chart. In the alternate signals, HSA like signals, I see. Yesterday there was a kahuna, bearish kahuna, also shown here on the candle chart. And yesterday's drop was the biggest drop in 1 month. Those are warning signals, but still until this trend line support is broken, the trend is intact, trend is continuing in an uptrend. Dia, in the weekly is at a price range where bearish headwinds came earlier 2 times, and it is somewhat up from the recent low. So I'm not going to buy Dia at this point. In the daily also it is at a price level where a bearish headwind had come earlier. So I'm not going to buy now. And weekly, daily, both are bullish in color. So I'm not going to short as well. Over longer term, Dia is underperforming the market shown by the relative performance line tilting down. We saw SPY and QQQ had relatively higher volume yesterday, down volume. Dia came down but very slightly. In fact, closed with a bullish color, bullish shape candle, and the volume was below average. Therefore, though over longer period Dia is underperforming the market, yesterday Dia outperformed. We are seeing this flip-flop between different categories for many weeks now. Lastly, IWM Russell 2000 ETF. In last Wednesday's webinar, that is when I discussed the USA market in detail, that was 21st on this day. I remember right on, okay, not on that day, that was Wednesday's pre-market. So right on this day, Tuesday's close, I looked at all the market ETFs and I mentioned that though IWM was going up with a long bullish shape candle, looking at the weekly daily, I mentioned that instead of trying to buy, if it tilts down, I like to look for short ideas. It didn't give any Q swing short trade setup, but my anticipation came true. It didn't go up and it is the worst performing ETF right now. Came down from the trendline resistance. Yesterday it had bearish flow and bearish backdrop. However, daily candle had lower tail, so it was not bearish enough to take a short trade. If the lower tail was not there, for example, if price closed right at this point, then it would confirm a go with flow short setup yesterday, but it did not because of the long lower tail. Yesterday's volume was above average. And if you look back, the volume pattern in the daily as well as in the weekly, if you see the very or extreme high volume days or weeks, those have dots on the bars. As far as you can go in both daily and weekly, you see the down volume days or weeks are all bearish. The very or extreme high volume days or weeks are all bearish, no bullish day or week, and that is continuing, while in the weekly it is moving inside a range. In the daily it is moving inside the same range, and for shorter term it is coming down in a downtrend. This is the only USA market ETF that is not in an uptrend. The others are in an uptrend. Does it mean everything is rosy? That is not true, and that I showed in the previous webinars also. by looking at different internals and breadth indicators. We will look at that, but before that, let's look at IBD 50 ETF, FFTY. This also shows everything is not rosy. It's moving inside a range. The lower point is limited by watermark level. The upper limit is created by trendline resistance. So if anything, it is gradually coming down as far as the swing highs are concerned. When the FFTY is performing like this, it is not easy to make money trading growth stocks in the traditional IBD way, that is breakout trades. As we can see, the high points are coming down, so obviously the constituent stocks in aggregate are failing to extend the breakout. It could be traded, however, using the box long trade setup when price came to the watermark support at the lower end of the sideways range, then went up with a bull release signal associated with very high volume reversal. So right on this day, it confirmed a double bottom box long trade setup, and that had covered the risk distance by the time it came to the trend line resistance or near the trend line resistance. Once the risk distance was covered, profit could be booked. As I have mentioned many times, it always pays better to close long trades at or near trendline resistance and close short trades at or near trendline support. In this way, using swing trading principles, you could trade FFTY, but trading breakouts would have failed because the highs are coming down swing by swing. Everything is not rosy, not for the breakout traders with the IBD techniques. If we look at the ARK fund, the main ETF ARKK, that is also not going anywhere. In the weekly chart, it is in a triangle pattern. The triangle is narrowing. It's neither moving up nor moving down. And it is also difficult to make profit by trading ARK constituent stocks using IBD breakouts. The breakouts are not working for the constituent stocks. We know that because the high points are gradually coming down. Here in the daily, it is near the tip of the triangle pattern. Here we would not like to take a reversal at trendline resistance or support because the risk reward may not be attractive. Moving truly sideways, both in weekly and daily inside triangle patterns. If at all you look for signs of bearishness or bullishness being more prevalent than the other one being more prevalent, we look at the volume pattern, and when you see more thick or dotted red bars than green bars, then you know that overall selling pressure is more than buying pressure. But there is no swing trade setup now in ARK. Let's have a look at the mega caps. Many of them have announced earnings or about to announce earnings. Netflix. For many weeks, it's not going anywhere. Many weeks, many months, in fact. It is moving in a wide range in the weekly, and that can be traded using the box trade setup by buying at the lower points using the daily chart using the unambiguous checklist. At the recent high at the very top, it displayed a bearish headwind signal, and that could catch the very high. Using the headwind reversal setup, you could take a trade and make a considerable profit. As you know, at the very top, I don't mind shorting even fundamentally strong stocks using naked put options. And those put options bought at the very top using the bearish headwind trade would have given significant profit. There is no trade at the right edge. The candles, in fact successive candles 4 times in a row, are of indecision shape. I'm looking at the mega caps because in recent days, weeks, months, mega caps were pushing the market higher and higher to a large extent. And see if that character is changing. Netflix was moving sideways. Microsoft, it was a strong performer. Interestingly, yesterday it displayed a bearish headwind at the very top, but it has a trendline support. So I'm not going to consider shorting unless it can break down below the support. It is remaining in a strong uptrend. Facebook was and continuing to be very strong. There is no reversal setup also, no reversal signal also in the daily chart. Too high in the price pattern at upper boundary and overbought to take a long trade, but it is probably one of the most bullish mega cap tech stocks. Apple, one more mega cap that displayed a bearish headwind near the very top, and earlier the bearish headwind came at the same price level. On the very day it made an intraday all-time high. Looking at that, when price tried to go to that level one day earlier, you would not like to look for breakout trades. Instead, you would look for shorting opportunities. And yesterday, using intraday charts, you could take a short trade, which I in fact did. I took put verticals. In fact, earnings was just after market close. I traded intraday using put verticals, closed most of the positions, most of the lots with some profit before market close, and holding a token position to see how it does. But most of the positions I closed. I used the bearish headwind at the very top and the intraday signals to take a short trade. Let's look at the intraday chart. Change the time template to the intraday template, and in the morning session I use 5-minute interval. I was ready to short Apple because a bearish headwind was there earlier. I think I had traded that also using intraday chart when it displayed bearish headwind. On the day it made intraday all-time high. Yesterday I looked at the price pattern. It created the early range low and early range high after market open, and then on this candle I'm using 5-minute bar in the morning session. On this bar it broke below the early range low that had a lower tail, so I could take a short trade following Q guideline once price went below the lower tail. I would put my stop just above the recent high, not recent high, for the day it will be above the early range high, and once the risk distance was covered, which was true when price came to this pause line, dynamically drawn pause line, I could book partial profit and I could hold on to partial position. That's how I traded it. I used put verticals. Why did I use put verticals? Because earnings is there. I didn't want to use naked puts. If earnings result was bullish and price went up, the naked puts would lose value very quickly. So instead I used put verticals, and I didn't take near term expiry. This is July. I think I took August or maybe even September expiry. I gave enough time. So in case the earnings result went against me, I would have time to hold on to the vertical limited risk trade for longer duration. That's how I traded it. I exited most of the put verticals when I had a reasonable profit. I am holding a small token position, put verticals, I think expiring in September. If it goes down today at 50% of max profit, I'll exit the trade. If it goes up, I'll hold it because it is defined risk trade. I planned it like that. Apple, it was not as strong as Facebook and Microsoft. You can see in the daily pattern also it's creating double top. Tesla, not bullish, not bearish, very much inside a range similar to Netflix. In the daily, the range is becoming narrow, coming to the tip of the triangle pattern. Will not be able to take a trade where reward risk ratio will be attractive. Will not be able to take reversal trades at trend line resistance or support in a true triangle pattern. Amazon, again not so bullish as Microsoft and Facebook, did break out of the very long sideways range, but after that failed to follow through. Interestingly, Amazon displayed a bearish headwind right near the very top. After that, it failed to go up. I traded Amazon using naked put somewhere in this area. I made some profit, but it is too expensive stock. I didn't hold on to the trade long enough. That's fine. I took the trade using intraday chart and I explained the trade when I took it in YouTube videos. Now it is creating lower high. Yesterday price came down, but it had long lower tail and it is also near trend line support, so there is no question of shorting. It is kind of inside a triangle pattern, so there is no thought of going long as well. In the alternate signals, yesterday it had the biggest down move in 1 month. It fell with higher than average volume, had a bear release signal. Those are alert signals and I'm not going to consider buying Amazon now. Last one, Google, very strong. Both in weekly, daily, above upper boundary. I am not going to buy it. In the alternate signals, we see that it is now at very high thrust and very high jump levels. A level from where a reversal is likely. It's more extended to the upside than it had been in a very long time, both in terms of how far it has moved, jump, and how fast it has moved there. To extend it, however, there is not enough reversal signals to take any reversal short trade. Yesterday price did come down with very high volume, but the candle shape and color both are neutral. There is no bearish headwind, so there is no short trade setup. What is our conclusion from the mega caps? Three of them, Microsoft, Facebook and Google, are strongest. Netflix sideways, Tesla sideways, Apple at a double top, and Amazon seems to be creating a false upside breakout. It broke out, but it is stagnating there. So it's a mixed picture. Not all mega caps are as strong as they were before, especially Netflix and Tesla. They are very much sideways. Next Apple, next Amazon. And lastly, the most bullish ones are Microsoft, Facebook, Google. We'll see how they move after the earnings results, but that is the picture. Little bit mixed, but overall still very bullish in terms of the mega caps. And when we said that, let's have a look at the mega cap top 20 to see how mega caps are doing relative to the market. It's a custom index in Q Global Market Breadth Studies, and it is very much in an uptrend. So mega cap top 20 is steadily going up. pullback from the upper boundary level yesterday with, interestingly, again a bearish headwind possible reversal signal. But the candle shape is mixed and it has trend line support, so there is no headwind reversal short trade setup. But whenever the headwind comes, we are taking note of that. And I saw that the headwind came in multiple market ETFs and several mega cap stocks and even in the USA mega cap top 20 custom index. Let's look at the composite indices. Now we are looking at more broad market at the Nasdaq and NYSE exchanges as a whole. Is the market very strong? Underneath? No. Underneath the major ETFs, it's not so strong. We can see that from the yellow line, percentage of stocks above 50 MA, and this I am showing for many webinars, is gradually coming down. For Nasdaq, it is at around 30% level. So only 30% of Nasdaq stocks as a whole are above their 50-day moving average. That is not a bullish picture. The same percentage for NYSE is better, above 40. This is happening for many weeks now. Overall, from that angle, which angle? What percentage of stocks are above 50 MA? From that angle, NYSE is remaining stronger than Nasdaq for a long time, though the mega cap tech stocks are much stronger than both Nasdaq and NYSE. Under the hood, Nasdaq as a whole is actually weaker. Both of them are below their respective average lines, below the 50% level. So from this angle, the market is not bullish. If anything, it is bearish. Let's look at now the very useful market breadth total view. A single chart can convey so much information. This is calculated from the data of the two composites we saw, Nasdaq and NYSE, and then four major indices, S&P 1500, 500, Nasdaq 100, Dow Jones Industrials. Here also the above 50 MA calculation is gradually coming down. Below the average line, below 50% level. So from this angle, the market as a whole under the hood is bearish. There is no distribution count, however, near the right edge. If anything, the last two counts are all accumulation counts. Before that, on this Monday, we had a distribution count of 2 that was nullified immediately by an accumulation count of 2, then accumulation count of 1, not major one. We have to have at least 2 accumulation count to consider it worthwhile. That's why the colors are different. At the right edge, there is no distribution count. What I am looking for at the right edge, when the market is at all or near all-time high, I am looking for Hindenburg, a signal that comes when there is heavy selling by professionals while there is heavy buying by amateurs. There is no Hindenburg at the right edge. I am looking for distribution counts of 2 or more. There is no distribution count at all. Or I am looking for bingo, maybe out of bathwater, heavy selling at the very top, maybe a climax selling at the top. That is also not there. Which category of stock is doing better, growth, value, or small cap, large cap? We can see that from these plots. The magenta dotted line here is steadily going up, that is growth versus value, showing that growth is outperforming value for the USA market. Yesterday it did go below the trend line that I drew, but it is still in an uptrend with higher high, higher low. So growth is continuing to outperform value. Small cap versus large cap is coming down, so small cap is doing worse, underperforming. And remember, in case of IWM also, from a different angle, looking at the Q weekly daily charts, I decided not to buy IWM in the last Wednesday's webinar. If anything, I was looking for shorts. That is in sync with what the market is also telling, that small cap is continuing to underperform. Now this plot to some extent explains that why this market is difficult for swing traders. Certainly even more difficult for breakout traders, but even for swing traders. One reason is that though ETFs QQQ, ISPY are showing market is going up, 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 the yellow line, which used to be above, much above 80% level here, somewhat above 80% level here, the green line is 80% level. That means 80% of all stocks in the two composites for major indices used to be above their 50-day moving average. And in fact, from the end of previous year, from December onwards, that yellow line is gradually coming down. So stocks under the hood all across the composites indices and major indices, they are all coming down, but gradually. While somebody is buying the mega cap, large cap stocks to keep the ETFs up, major ETFs up. That is why if you are not buying only those stocks, large cap, mega caps, this is the reason why if you are buying stocks, you are eroding equity, but it is eroding gradually across the board, but it is eroding gradually, not suddenly coming down. Another reason it had been difficult from the beginning of the year, or in fact even before that, is the flip-flop between different categories. If you see in this area, growth was outperforming. The growth versus value line was going up. In this area, growth was underperforming. In this area, it was equal performing and then outperforming again. So if you held on to the same growth stocks for a long time, you probably lost money, because once it outperformed, underperformed, equal performed, and again outperformed. Same for small cap versus large cap. First it was equal performing, then outperforming, and now underperforming. So unless you are alert enough based on these analysis, also looking at Q edge and other signals, you could switch your preference from growth to value, from small cap to large cap. It had been difficult to make money, certainly trading breakout trades, but also swing trades. But using Q setup, short-term trades, there was no reason to lose money, as the examples I shared in live session. In recent days, several of my trades stopped out, but my account equity didn't go down, didn't go up also. For last couple of months, almost since March, it didn't go up much. Maybe went up by 5% or so. That's a small percentage gain from March, April, May, June. We are near end of July. But at least I managed not to erode my capital. Anyway, this explains the flip-flop between growth versus value and small cap versus large cap, and the coming down of the yellow line shows why trading is not at all as easy this year as it was last year. The market breadth views are showing that under the hood it is not so rosy. And let's look at the very useful 1 month to 1 day sector industry stock advance decline. In last webinar also I mentioned that 1-2 days were flip-flopping last Wednesday session, and that time both 1 day 2 day periods were green, and I mentioned that if the flip-flop continues, the logical next color will be red. The 1 day has turned red, the 2 day is still green. If today market comes down even by a little bit, the 2 day period will also turn red, showing that the flip-flop across 1 and 2 day periods for sector industry stock advance decline is very much intact, the flip-flop is intact. And while that flip-flop is happening in shorter interval, the red color is propagating to the higher intervals. The 1 month period is now clearly bearish. 82% of sectors are down, a very large 78, almost 80% of industries are down, 64% of stocks are down. 10-day period is also bearish. So under the hood, in fact, selling is taking place. That is clear from the QH sector industry stock advanced decline view, and we could also see that from the yellow line in Q market breadth gradually coming down. Is it oversold from breadth side? No. The bucket analysis shows that percentage of stocks below the below the lower boundary in the lowest bucket is only at 1.8%. Is it overbought? No. Percentage of stocks in the uppermost bucket above upper Bollinger Band is only 4.5%. So it's neither at upper extreme nor at lower extreme, neither oversold nor overbought. Overall, is it bullish or bearish from bucket perspective? It is bearish because 55% of stocks are below their mid Bollinger Band. Not extremely bearish, 55%, but it is bearish nonetheless. Not seeing the bullishness that is visible from the major market ETFs. Next, technical breadth, the weekly period first, using Q Finder. All signals balanced, slightly more bearish, 53% of signals are bearish. Strength signals more bullish than bearish, however, that is associated with more bearish reversals taken together. Bullish strength with bearish reversal, that is bearish. Trend continuation signals are also bearish. So the weekly period is bearish. I see the number of bearish headwinds is creeping up in the weekly interval. Once it reaches 2%, 3% or so, then it is a more alert condition. Currently it is about 1%. Once it goes to 40, 50 number, then we'll take extra note of that. Weekly interval, Q Finder technical breadth, bearish, not bullish, but not much. You may say it is balanced. If we look at all signals, 53% bearish, it's balanced. And daily interval, little bit more bearish, 64% of overall signals are bearish. Strength is also bearish, reversal bearish, trend continuation bearish. Here the daily interval is more bearish than the weekly interval. Technical breadth is also not showing the bullishness that is visible from the market ETFs. If you have noticed, in the recent days I have not posted many trade ideas in the forum. That is because of the flip-flopping, and market recovered in last couple of days, but looking at the breadth from different angles, from Finder, from market breadth studies, from Q Edge advanced decline breadth, I was not convinced about the strength of the up move under the hood. So I didn't take many long trades. I was waiting for short trades, but there are not many short trades that are attractive either. That may change. I am taking some trades, but I am taking them using intraday interval, like I traded Apple. I explained today how I traded Apple in the bearish direction yesterday. We have some time now. Let's look if some stock is breaking down, maybe after earnings, and is it giving a short trade setup? Because under the hood I see more bearish signal than bullish signal. Let's use Q Finder for that. Look for all the bearish breakouts. I have 95 breakdowns. Let's calculate their fundamental score using Q Vital. I transferred all the breakdown stocks to Q Vital with the smart icons. It's retrieving data from Refinitiv, completed, calculated the scorecard. Let's look at the stocks. First look at Crown Jewel, bearish side, only one, NKTR. It may be a biotech. Went down by 2% yesterday. Why it is Crown Jewel bearish side? Because it is overvalued with negative earnings growth as well as negative revenue growth. Earnings is on 5th August, went down by 2% yesterday. Funds are not buying. That's a good sign for shorting. Insiders not buying. That's a good sign for shorting. I don't put so much emphasis on analyst score or rating. Neither do I put much emphasis on insider, but I do look at the fund accumulation or distribution, and funds are not accumulating it. It is very close to 52-week low, so I may not be able to short it. Only 3% above 52-week low, 40% below 52-week high. Still no harm checking the stock out. Let's open it with Q Global using the chart icon. It's nicely breaking down. That's what I looked for, breaking down with above average volume, but it's too much low in the price pattern near a trend line support. Earnings is nearby. I'm not going to short it. Interestingly, the bearish headwind came very near the recent top. From that time onward, you could look for short trades. If you didn't take a short using the bearish headwind, the next shorting opportunity would have come using the go with flow short setups. That is the first bearish flow candle that came after creating a lower high. This first bearish flow candle with a lower high swing had a long lower tail, so you might not want to short there. However, this bearish flow candle didn't have any long lower tail, so this candle confirmed a go with flow short setup. You could take it at the close of the bar, putting stop above the swing high, and once price came to lower boundary or more than risk distance was covered, you could book at least partial profit. If you wanted, you could continue to hold the remaining position all the way, or you could try to short it at subsequent bearish flow candles if you had a proper setup. Some of the other magenta candles did give a proper go with flow short setup. In any case, the first one that came after the bearish headwind gave a large profit, and it is continuing to remain in a downtrend since then. Bearish headwind was very helpful to indicate the potential of a trend reversal at the very top. I'll not try to short it now. Let's go back to the list of stocks. Delete Nectar, NKTR, that was NKTR. Now, instead of crown jewels, let's look for 3-star bearish candidates. 3-star meaning they are overvalued and with negative earnings growth. These stocks went down. Many of them are not accumulated at all by funds. So let me sort them by the fund score. And now in the latest release, you can sort by any column in any of the Q icon systems, that is Edge, Vital, Index, Finder. You can sort by using hotkeys Ctrl Shift D for descending, Ctrl Shift A for ascending. For that to work, you may keep Q Edge open, and that is the standard use of Q systems. Q Edge is always open for all the Q traders. That's how that's from where this sorting is controlled. So I'm pressing Ctrl Shift A to sort it, and I'm going to look at the 3-star bearish candidates which also has no fund accumulation. Let's open them using Q charts. SPCE, Virgin Galactic. We could try to take a go with flow short setup on this day, and certainly on this day. Also on this day, this day, this day. All these were valid go with flow short setups, trend following short setups, and all of them gave significant profit. Now it is near trend line support with indecision candle, indecisive shape candle. I'm not going to short it now. Close this. NVCR. It's also near trend line support. Yesterday it broke down, but it had lower tail also. So I'm not going to short it now. NIO. This is looking like a better shorting candidate. Interestingly, this also displayed bearish headwind multiple times near the very top. Not every time after bearish headwind was displayed price dropped, but it did drop from these 2-3 points, significant drops. And after the bearish headwind that came last started to go down, and just yesterday it broke below trendline support, broke below the triangle pattern with very high volume with a bearish shape, bearish color candle that gave a breakdown short setup yesterday in NEO. Fundamentally very weak, funds are not buying it. Let's look at it using the 3 chart template. Weekly backdrop bearish allows us to short. Daily we already saw bearish breakdown. In the alternate signals, I see a biggest down move in 3 months. That is always significant. Those may not be oversold conditions. Those may be beginning of a bigger down move when it happens from a relatively higher price level. So this is a bearish sign, biggest down move in 3 months. It had also a bearish pocket pivot yesterday, very high volume, bearish pressure as well. So it has many bearish signals. It's giving a valid bearish breakdown setup as of yesterday's close. That was NEO, but we didn't check its industry. Let's check that out. Let's look at NEO's score first using the single chart score. In the latest version of Q Vital that I am using here, in the rootstock field, you may enter both the ticker or the Reuters symbol, definitive symbol. If you enter ticker symbol like I did now, it first retrieves the ticker symbol, in this case neo.n, and then further retrieves the data about the stock, and now retrieving peer stocks. Lastly, it will retrieve detail of the peer stocks and calculate scorecard. The industry is automobile manufacturer. We don't have to wait. We can look up the industry rotation using QH. Let's look at the rotation. The industry rotation is weak enough that allows us to short magenta color in the recent periods. So NEO is giving a breakdown short setup. Next one, firstly, here also the bearish headwind came near the top. After that it dropped, went below trendline support yesterday, but candle has lower tail, not going to short it now. Close. BYND, beyond mid. Again it broke below the trendline support, however with a long lower tail, not going to short it. So we went through all the breakdown candidates from QFinder. First calculated their fundamental scorecard and looked at the crown jewels, and then 3-star fundamental, weak fundamentals, and looked for technical setups. we found only one so far, NEO, and we saw Chinese stocks are under pressure, China and Hong Kong. Those are the only two global markets that broke down. NEO is a Chinese stock that also broke down and gave a valid breakdown short setup as of yesterday's close. If it continues to go down today, then you may look for a short trade using the intraday time frame. If it goes up, what to do? You may look for a shorting entry as it hits the trend line support that is broken now. Oftentimes price will go up just to the same broken trend line support if you extended that, and then it will drop again from there, probably giving a go with flow short trade setup. You may try to enter that using intraday fine tune chart. As you saw, we didn't find many trade setups from the breakdowns. So that also is a way of the market telling that this is not the time to take many short trades. And I explored the same process earlier also in, I think, the last Wednesday's webinar also, that we were not easily finding 360 degrees long or short trades. That's a way of market to tell that we may wait for more opportune times. We are at the 1 hour point. Let me end today's session. Thanks a lot for attending. I look forward to seeing you again in our next session, which will be during the weekend. I will announce the date and time on Twitter. I usually conduct it on Saturday, sometime during the day, Eastern Standard Time. And if you are subscribing to the Trading Profitably YouTube channel, you will get notification from there also. Thanks a lot once again. Have a great week. Keep safe and no reason not to do that. Trade profitably. Thank you.